On the last trading session of a Friday, gold spot printed a closing price little above $1,939 per ounce, little higher than the previous close of the last week, and gold in the last week traded as low as $1,906 and as high as $1,966 per ounce. The numbers are rounded and the market is closed. In terms of the moving averages on daily time frame, gold is trading above its all daily simple moving averages except the 20 days daily simple moving average. We are still in a bullet trend, and for the RSI readings, it's moderate daily and stretched weekly and overbought monthly. Supports are seen at 1918 if broken, then 1906 if broken, 1880, and the resistance levels, it's 1968, then 1978, then 2030. That's all. We'll move now to the economic calendar. On the economic calendar for the coming week and from the United States, we are waiting for the following economic headers to be released: the imports exports price index and the industrial production due on Tuesday, and on Wednesday we'll have the retail sales, core retail sales, and the Fed interest rate decision and the FOMC statement, and on Thursday the building permits. That's all. We'll move on now to the trading strategy. Hi again. In our last video, we talked about different scenarios that gold could play out during the week. We talked about the possibility to break out, and we said this is very minimal. And we talked about a consolidation, which we gave it like somehow moderate percentage, like 20% that gold will stay between 1900 and 2000. We were like so much excited or expecting that gold is going to break down. In fact, it was about to break down. It reached almost to 1900 and then found some buyers and turned around and rallied to almost 1967. What is happening right now is a consolidation between 1900 and 2000. This is not going to eliminate the fact that gold needs to break down into into its 6-month cycle low, which we expected either the coming week or or in 2 or 3 weeks max to max. Put it this way, the stocks are selling off. Oil is selling off. We have seen some big moves to the downside in some currencies, like the British pound the last week sold off heavily, and I do expect that we are going to see the worst of this sell-off. I don't mean the pound itself, I mean the markets. Overall, the general markets are going to sell off in the coming week ahead of the Fed meeting, because the relief bill is not yet finalized, still in the debates in the Congress, and the Fed is not going to cut interest rate into below zero. The Fed have been clear about this point. They said they are not going to cut the interest rate below zero, and I don't see them doing this before 2021. There is no really a reason for the markets to rally, either metals or stocks or commodities. I do expect that we are going to see more of the sell-off that we have had last week again into the coming week, and in a worst version of what we have seen. But I don't have a crystal ball to give you the absolute, so we follow technicalities. If gold breaks and close below 1900, it's a sell to 1750. Otherwise, if it surprises and it moves, turns around and it closes above 2000, above 1978 at least, it's a buy toward 2250. That's all for this week. Thank you guys for watching. Please share, like, and subscribe, and see you next week in another video.
It's time to blink and wink to the girl with the glamorous things. Go on, this ship won't sink. We feel like nightclub kings. Come on, let's move to the beat